Hey everyone, welcome to another week of #askrobco with James Wild. Hope you're all well, hope you enjoyed the heat wave and hopefully you weren't too badly affected by the storms and the floods that followed. The Olympics have started and Great Britain have finally got on the medal table and I was really impressed, really enjoyed Magic Monday, and let's hope that the medals keep flowing and we have more to be proud of. So here we are again with the update, property weekly market update, live with James Wild to give you all of the intel, all of the data and share with you what we're seeing on the ground and the tracking of the industry. So James, welcome, hope you're well.
Yeah, really good, thanks Rob. How about yourself?
Yeah, really good, thank you. Let's go straight into the data. We've got some good numbers this week. As we discussed previously, there was that period closing out stamp duty where numbers went really low, and now we're starting to see some good numbers returning with instructions and sales figures, if you want to run through those.
Yeah, thank you, Rob. So like we said, in the couple of weeks after the stamp duty deadline passed, we had two really subdued weeks in terms of the transaction volumes. This week, numbers have recovered. We're up at 118 sales for this week, which if we go back across the year, it's still definitely in the lower quartile in terms of those weekly numbers. However, when we look at sort of the quieter months, I know we've mentioned before, those months over Easter earlier this year, we're kind of broadly in line with those, but I think it's the first signs that the market is stabilising. Like we said, a lot of deals might have been accelerated and pushed forward just to try and make that stamp duty deadline, those savings. So we're starting to see the market returning to some sort of status quo, normalisation. Also this week, which is positive, Rob, we've got higher new instructions coming onto the market, which I think will allow, obviously, it's what's required to gain those transaction volumes and sales. So I think that's positive in terms of those numbers. And we're sort of, what we've seen this year is about 300 to 400 per week. It has been the sort of typical new instruction volumes on a per week basis.
I think that is absolutely what I expected. I've been on the streets all of last week, speaking to all the agents that we deal with, getting their intel, and they've all been telling me more instructions have been coming on and more properties are going under offer, and so it's no surprise to me that that's exactly what this week's data and intel have reflected. The word on the street was telling me that exact story.
Yeah, and like we say, Rob, the new instruction volumes which we got at the real sort of peak of what we've seen in the last 18 months, those came after lockdown, and there was really sort of pent-up demand, and those which were sort of previously looking to sell, which there was an influx to the market of 600-700 properties per week coming on the market. So I think it's normal for those figures to fall off, and they've been pretty, if you look at our graphs which we produce, they've been pretty steady on the 300 to 400 mark.
Yeah, just to make sure everyone, if you're watching on YouTube or you've signed up for the podcast and you're on our email data list, please make sure that you're getting all of the data and all of our documents sent to you every week. If you're not, please go through those two platforms or the website to ensure that you receive that every week. Very important, so you can actually see visually over and beyond what we're sharing with you, all of those great numbers. What else we got, James?
Well, I want to talk firstly, Rob, about the last few weeks. We've obviously had the heat wave. We've had quite almost tropical rain here in the UK, with flooding earlier this week again, with most notably a lot of roads flooded here in the UK, and also a lot of basement flats have been flooded out, unfortunately. So real sort of commiserations to any of those that have been affected. But whenever these bad events happen, it's good to sort of try and learn from them, and hopefully all those affected had the adequate insurance. If you were an owner-occupier living in the flat, you had the correct insurance. If you're a tenant, hopefully you had some contents cover and you weren't dramatically affected by that. But in terms of the lending and mortgageability, having seen this happen twice in the last few weeks, Rob, do you think there'll be any changes at all? Any lenders might be more cautious on lending on those lower ground floor flats, do you think, or basement flats, or even houses? You know, in prime central London, we commonly see large iceberg houses with a lower ground floor and a subterranean sub-basement. Possibly that mortgage lenders might be a little bit more cautious on lending on those assets.
I think it's part and parcel of lending in the UK that you're going to get these periods of flash storms and weather, and it isn't uncommon that we will go through periods of time like that. And I think the mortgage market has a responsibility to lend, obviously, and as you said, the most important thing, that adequate insurance is in place, that if unfortunately someone is affected by this, whether it's your home or through an investment product, as long as you've got the adequate insurance, I think that's really the key. And obviously the market will continue lending, and hopefully not too many people are too badly affected.
Yeah, it's obviously a new type of flooding. Also, we had the Thames Barrier put in a couple of decades ago, and that's obviously been put up a few times, more in winter, as that's more associated with the sort of high water table in the Thames. So a new sort of type of flooding is flash flooding, where the infrastructure and storm drains can't quite cope with the volumes in the short term rainfall we've had. So let's move into the sort of property news and what's been happening this week. The Morrisons takeover deal, that's still bubbling away and is yet to get over the line. Fortress is now in talks with Apollo over a possible joint venture there as well, so continue to bring you news on that. And furthermore, the department store Selfridges has been listed for sale. Quite an interesting one that's come up. The store's owned by the Weston family, who acquired the chain back in 2003. Offers are speculatively expected and anticipated to be around the £4 billion mark, with the company having real estate assets worth about £2 billion alone in property. Quite an interesting one, Selfridges. It's obviously a premium department store, Rob. We've seen other department stores get themselves run into trouble with obviously the pandemic in the last 18 months. Hopefully they continue to expand Selfridges. It's obviously a well-known brand and premium high street store with many flagship stores across the UK.
Yeah, I think interesting to see obviously the demise of Debenhams, and they've gone to an online product, and I've seen they've aggressively been going online over the last few weeks, and they've actually followed the Selfridges approach. They've gone with a blue bag with Debenhams logo in the middle, and it will be interesting to watch that space. And maybe Selfridges are also thinking about something like that. And then we discussed the other week in terms of the retail space being reduced and the offering of residential accommodation that we discussed as an alternative. So I think that's going to be a moving piece. The high street retail online offering, I think we're just going to be talking about this every week as we move into a new era of department store across the UK, across Europe and across the world.
Definitely, thank you, Rob. And then in terms of more industry news this week, buy-to-let specialist lender Fleet Mortgages announced its acquisition of the business by Starling Bank in a £50 million deal. Now, Starling will become the sole funder of the future organisations of Fleet Mortgages, allowing Fleet to build on its lending operation by securing access to Starling's deposit base. Interesting move there from Fleet Mortgages and their buy-to-let sector, one which in terms of build to rent, whether they're going to move into more that space or whether they're going to keep with their more domestic buy-to-let products. I'm sure they'll be looking to expand on the back of this.
Absolutely, and congratulations to our good friends at Fleet. we work very closely with them, and it's very interesting to see how they've really worked hard on some products that they specialise in. HMO being one of them, good buy-to-let product, and multiple housing. So they're a really good niche lender, and congratulations to them and their team who work tremendously hard to be where they are in the marketplace. And it will be really interesting to see how this new takeover looks, and as you just said, James, the new direction they may be going into. And obviously, as and when we have a better understanding of what that looks like, we will update everyone.
Definitely. They've got a very strong business model, and to date, Fleet have originated £2.3 billion of mortgages and experienced zero credit losses. So a very strong business model they have. Currently has a circa 1.75 billion of mortgages under management as well. So I'm sure they'll be looking to, like we said, Rob, expand on that. Just moving through into some super prime news in terms of the London market here. We brought you news, it was earlier last year, of a record sale here in London. Rutland Gate selling for around £200 million, having been previously discreetly marketed some sort of 5 to 8 years ago for a figure of 300 million, then transacting. The Rutland Gate mansions now receive planning permission for a range of expansions and reconfigurements. Their large roof garden, Olympic-sized swimming pool apparently, and some subterranean car parking. Now, speculators have been commentating on this deal since then, its redevelopment, that the property could command an absolute record rate, £700 million they're speculating, which would equate to sort of roughly £10,000 per square foot, Rob. Absolutely staggering. The only thing that could possibly rival that is sort of Buckingham Palace itself, almost, isn't it? A staggering one, a real sort of high net worth centrepiece, that particular property in Knightsbridge. Other news we've got in terms of availability of super prime properties and some of the sales which we've seen in the last 18 months. Nick Candy's penthouse at 1 Hyde Park remains available for a circa £175 million, staggering penthouse flat with obviously views directly into Hyde Park. That follows his brother's exit in some of his London property last year. We saw down at Cambridge Terrace, Regent's Park, a property which has been 7 Nash terraces merged into one, selling for around £104 million last year. So the two brothers sort of liquidating some of their London property assets. Whilst we're on Regent's Park as well, in terms of prime central London, there's the Grade 1 listed 1 to 18 York Terrace East remains softly available with a price tag in the region of £185 million. That's a slightly different proposition, as it's got planning permission for conversion into flats, although given some of the high net worth money which has been coming into England in the last 18 months, it could present the opportunity for a high net worth individual to possibly convert that into a single residence in Regent's Park. So just some news there on super prime. Yeah,
I mean, as we've discussed in previous weeks, one of the things that's come out of the pandemic is some ultra high net worths have performed exceedingly well and grown their net worth, which allows this type of transaction to happen. And so, although they are obviously few and far between, it doesn't surprise me when you hear of it happening, because of the way that the wealth has grown continuously, and especially through the pandemic. Obviously, some people have lost money and some people have done extremely well through that. So it would be great to see some of those trades go through.
That's it, definitely a variety of properties there as well. You've got sort of those which are sort of brand new, turnkey, ready to move into, and those which also have presented somewhat of a project, which is a prime example at the Rutland Gate mansion there, one which is being ultimately completely reconfigured and remodelled. So a variety of opportunities in the prime and super prime real estate sector here in London.
Brilliant, James. Great data. Anything else for this week?
That's it from me.
Brilliant. Thanks, everyone. Short, sharp, on the ground updates. The market is moving. We're getting beyond the stamp duty window closure. Obviously, we're in summer season now, so holidays, and we've got the ongoing challenges that we're facing with the pandemic. We will be here week in, week out to talk you and walk you through what is happening on the ground. Thank you for all your support on YouTube and Instagram and LinkedIn and all the socials. And thank you for everyone that's there every week on the podcast. As I said, keep signing up, keep asking questions, keep following us, keep supporting, and we will keep providing you with all the intel and all the data every week here on #AskRobCo. Everyone stay well, be positive, enjoy the summer as it continues, hopefully with the good weather, and we will see you next week. Take care, everyone. Thank you. Thanks, James.
Thanks very much, everyone.